So thank you all for joining us this morning, and we're going to talk about raising funding in the UK for Irish startups. And we're really lucky this morning to be joined by Kerry Dwyer from Swoop and Shana Chu from Tailr. So first off this morning, I'm just going to give you a little insight into what we do here in South East Wick. Many of you will know us, many of you are our clients, and we're delighted to see so many of you here this morning. So to explain what we do, we support entrepreneurs to start up in the Southeast, ideally. We work with high potential, ambitious entrepreneurs on a one-to-one basis most of the time. And we specifically support the development of Enterprise Ireland high potential startups through their HPSU investment pathway, and also in the preparation for their pre-seed instrument, the pre-seed start fund, the PSSF. So we do an awful lot of investor readiness with clients, and we were really lucky to work with Shana from Tailr, who you're going to hear from a little bit more today. So normally what we do, we work with startups at the very start, ideally. We look at the signposting and evaluation of the project. We mentor them at a very early stage. We work on some business modeling, and then we get to the point of doing some business planning with them. But at that point in time, once you get to the point that the startup has a minimum viable product, we head into that business planning, financial modelling, looking at grants, looking at pre-seed funding. And that's where the likes of Swoop could potentially come into the mix for some of you guys. We really head into investor readiness once that MVP is trialling and is getting to the point of being commercialised. And when the company is then looking for external funding. So we also have some small incubation space here in Waterford City. So we believe that great startups don't fund themselves. If they can, they're very, very lucky that they're able to fund themselves. But an awful lot of the time, we're looking at helping our startups to get investment, to get that early stage seed funding, be it pre-seed or seed stage. After that, we hope that they can fly the coop and do their own thing at the next stage. So the initial sources of funding that we talk about often are the promoter's own funds, or our friends, family and fools, and bootstrapping at that very early stage. Bank finance and business loans being quite difficult for startups to get. The local enterprise office grants are really, really useful. And where we come into play a lot of the time is the PSSF, the Enterprise Ireland Pre-Seed Start Fund. And then as companies move on to get equity investment and then high potential startup match funding or balance funding from Enterprise Ireland. The New Frontiers programs, Leader programs, Microfinance Ireland, accelerator investments are all areas that startups can get funding. And then, of course, private equity investment via potentially angels, via HBAN. And then we look, and what we want to talk about today is the opportunity for Irish companies to look to the UK to get value out of the fact that the UK has a very strong tax regime and supports for startups and for particularly around angel investment. So we're going to hear from Kerry from Swoop a lot about that today. You guys probably know an awful lot of this stuff, but just in case, in that pre-seed stage, we're talking about feasibility and priming grants, New Frontiers, phase 1, phase 2, which offers a stipend, and the likes of EIPSSF, the Pre-Seed Start Fund, which is 100,000 pre-seed funding from Enterprise Ireland in a convertible loan note. So we work very closely with companies across all the different BICs in Ireland. We work with the companies who are keen to get that funding. It is a process that is a little bit involved, and it starts with a workshop that the BICs offer, and then we do our one-to-one work with the company to prepare them for both the application and the potential interview. So that's something that we offer across the BICs across the whole year to support, as there is no longer any deadline on this. So if anybody's interested in that pre-seed start fund, they can come and have a chat with us. And then you move on to the seed funding end of things, where you're looking for that investor, that early stage investor, and then hopefully Enterprise Ireland HPSU. So that's what we're talking about today, because today we have Kerry from Swoop And also Shana, who's just closed her round. You'll probably have seen a lot of it on social media and in the media over the last few months, where she closed a round of over 700,000 with a number of investors. But some of those investors are based in the UK. And this is a great option for Irish startups to go and approach investors in the UK. And we want to understand today the nuts and bolts of that and how to do it. The team here in South East Pick, I'm not going to go into any detail, but if you have a look at our website, you can understand who we are, what we do, and who you can approach to have a chat at any stage. And we work obviously on behalf of Enterprise Ireland, and we work very closely with the other enterprise support stakeholders in the region. These are some of the companies that we've helped, a number of those you will recognise since 2019, so some of the bigger names that we have helped throughout that process. And we'd be very glad to add Tailr on nuts and bolts of why you're all here, which is to understand more about raising funding in the UK. So Kerry from Swoop, delighted to have her here, equity manager from Swoop, based in Ireland some of the time, based in the UK some of the time, was very involved with Shana in preparation for raising funding in the UK. And Kerry's going to give us an outline as to how they help Irish companies raise in the UK. Thanks, Kerry.
Thanks, Rosemary. Sorry, excuse me. Do you want me to? I'll just share my screen maybe with my slides. That was actually really helpful for me to see all the different timelines of the different funding options, because I know the Irish side of things can be a bit of a minefield. So actually find that really, really useful. Thanks. So yeah, nice to meet everyone, I guess. I'll just briefly introduce myself. My name's Kerry, as Rosemary said, and I look after the equity side of things at Swoop. So for those of you who don't know Swoop, we are essentially a one-stop shop for funding for businesses. We help businesses to access funding across kind of the whole funding landscape, with three main areas being equity, loans, and grants. And there's quite a lot of things in between there. So things like R&D tax credits, FX costs, any sort of area where you can save money or find funding. So today we're going to primarily touch on the equity side of things, as Rosemary mentioned, and I'll go into a bit more detail around how to access funding in the UK specifically, and we've got Shana who can go into detail on her journey. So just to give you a little bit of background on myself, as Rosemary mentioned, I kind of am between Ireland and the UK, one of the typical people who finish college and head over to London for a bit of crack. But yeah, so back and forth across between Dublin and London with Swoop a lot. So it's a nice mix. But as a result, I've kind of found myself working a lot with Irish businesses, partly for personal preference, but also because I think all the Irish businesses that I've worked with so far are pretty amazing. So the ecosystem here is so impressive. So love working with Irish founders. So please do reach out if you have any questions or if we can help with anything at all. So just to touch on what we'll cover today, obviously, as we mentioned, we'll discuss accessing funding in the UK as well as Ireland via SEIS and EIS. So there's specific tax schemes that I'll go through in more detail. Excuse me. I think a key here is making sure you're raising at the right time for you and your business. So that timeline that Rosemary showed around kind of pre-seed options before you go kind of really into that equity space is really, really interesting. And I think particularly the Irish landscape can be quite good at that early stage through Enterprise Ireland. So I really push people to kind of maximise those avenues where they can. So we'll go into a little bit of detail on that. And then, yeah, as I mentioned, kind of looking at other relevant funding as well, other than just equity, because I think equity can be quite hyped up a lot of the time. And then targeting the right investors, preparing for those initial meetings, due diligence, term sheet conversations, etc. We won't go into mass amount of detail on that, but I'll just touch on it. So yeah, I suppose the main reason we're here today is to understand how do I get funding in the UK, and I think Shana is a good case study, and she'll go into more detail of how she did it and how we kind of helped her with that. But the main thing to be aware of are the tax schemes, so SEIS and EIS, and I'll go into more detail on the next slide on exactly what those are. But I suppose to unlock those tax schemes, you essentially need to have a presence in the UK, and you need to be able to show that you're going to be growing your business in the UK, you're going to be creating jobs in the UK, and therefore improving the UK economy. So if you think of it from the taxman's perspective in the UK, why should they give investors in the UK a tax incentive to an Irish business to invest in an Irish business? You really need to be able to kind of show that you genuinely are going to be growing in the UK and have customers in the UK and staff and employees in the UK. So really kind of how that works is, and how we've helped businesses to date, is setting up a branch via your existing Irish business. So I think the really key thing to note for everyone to take away from this call today is that it cannot be a subsidiary and it cannot be a new entity. So you can't just create, let's just say, ABC Foods in Ireland. You can't then go and create ABC Foods in the UK and apply for SEIS and EIS, because that's technically a new business and it's a transfer of trade. Won't go into detail on that, but essentially, if you've got a business registered in Ireland and you want to raise in the UK, you need to do it via a branch of that existing Irish business. I can see someone messaging in the chat. Oh yeah, sorry. Please feel free to interrupt with questions or fire them into the chat there, and I'll try and answer them. I think a lot of the branch stuff can be a little bit wishy-washy, and it's often a case-by-case basis. So really where Swoop comes in there is to try and kind of ensure that you are actually going about it the right way. You are going to be eligible for SEIS, and that, you know, when you do your branch setup, you're firstly you know, in the right sectors. There's a few sectors that don't qualify for it, and a few other things. So really we kind of guide you on that. Working with a couple of Irish founders at the moment, and the branch setup is honestly one of the most archaic systems I've ever seen. It's all completely done by paper, and if there's something they want changed, they send it back to you by paper, you do it again by paper. So really like a big value add in terms of how we can help is just managing that and making sure that any communications with Companies House in this instance are looked after. So you initially do your UK branch setup via Companies House, which is like the CRO. And then from there, once you get that box ticked to say, yeah, you've got your UK branch, you then get what's called a UTR, which is your unique tax reference. So it's like your business's ID in the UK. Once you get that UTR, we can then go and apply for the Seed Enterprise Investment Scheme. So I'll just kind of go into a bit more detail on that, because it can be a little bit tricky to understand, but it's a really, really good tax scheme in the UK. So it's split into two. So the main one of concern for this call today is the first one, so SEIS, so it's Seed Enterprise Investment Scheme. And this is essentially the first £250,000 that you raise within the UK as a pre-seed business. The key here being that it needs to be within the first 3 years of your first trade, or first commercial sale. So that's kind of the key point to note on this, is that it's from your first commercial sale, so not from when you first incorporated, which is good, because a lot of businesses will incorporate, do a lot of R&D in their first year or two, and then think, oh my god, I've no time to raise. But actually it's 3 years from your first initial trade, so when you kind of first kicked off. So actually up until April this year, that was the rules were actually less lenient. So they were within your first 2 years, you could raise up to £150,000 under this scheme. So as of April, there's been improvements to those rules, which is really, really good news for early stage businesses. So the whole idea around SEIS is kind of that investors are taking a risk. They're investing in a seed stage business or pre-seed, and that they get 50% of their investment back on their tax bill at the end of the year. And the reason it's 50% is because those businesses are higher risk than those that are in the EIS bracket, which I'll mention next. And obviously there's quite a high risk there and a high chance of failure, unfortunately. But from a founder's perspective, it's really good, because you can say to investors, yeah, I've got approved for SEIS. It's really just a box ticked from HMRC to say, if you invest in this business, we'll give you half of it back on your tax bill at the end of the year. So it's really, really impressive scheme. I suppose it's similar to the EIS in Ireland, but just more attractive. And also just good to know there's no capital gains tax on any profits and no inheritance tax on those investments. So kind of everything is very positive about it. And then in terms of the EIS, it's essentially the exact same thing. So we're just taking the seed off the start of it. And so it's really the big brother. So once businesses kind of go past that 3-year stage, they move into the EIS bracket. And I suppose at this stage, they kind of have a good proof of, market validation, bit of traction ideally. And investors now are going, okay, this is a little bit less risky. I might take a good bet on this. So that's within your first 7 years of your first commercial trade, and you can raise up to 12 million under that scheme, and 3 million in a year. So investors can write off 30% of their investments with that. And I suppose just going back to that point, because it's not as high risk as the first 250k ticket that our founders are looking for, and the tax incentive isn't quite as attractive, but still really, really good. I think I might just pause there and see if anyone has any questions, because I think I've talked about this all day, every day, so it's kind of not too confusing for me, but I know it can be complicated.
There is a question there, actually. Can you see that, Kerry? It's if the Irish business already benefits from Irish EIS scheme, does this still remain valid if UK EIS is then subsequently used or raised, but I presume used? Yeah,
it does. So I suppose they kind of treat it as a separate raise in a sense, because you're kind of in a new country. And Shauna's going to be a good example when we go through how she did it. But I think what I highlight on this point is often that my worry initially kind of helping Irish founders raise in the UK is, oh my God, am I taking these great founders out of Ireland? And I want to support the Irish ecosystem, but as everyone knows, there's a limited amount of capital in Ireland. So what's great about these UK schemes is you can unlock an investor there, subsequently go back to Ireland and say, oh, I've got the first bit here, and that will unlock further investment in Ireland, hopefully. But I think Simon's question is asking, can you raise in Ireland? Or sorry, I'll just double check the way it's worded. But I the answer is yes. They kind of go hand in hand, and they sort of complement each other. So they're treated as completely separate schemes.
Okay, brilliant. Yeah. And another question here from Francis saying, is the timeline 3 years from UK branch trading or the original entity, I presume?
Original entity, yeah. So the branch is effectively, they're going to be looking at your overall business. And then it's just almost like, think of it as an arm of the business. So they're really going to be looking at the core business. When are you trading since? And then your UK branch date isn't really as relevant. It's more kind of around your stage of trading.
Brilliant. And God, the questions are flying in here. So I knew this was going to be interesting. Hi, Kerry. We are EIS approved and have raised funds here in Ireland. We are also EIS approved. Could we be SEIS approved in UK as we don't have any sales there? That's from Tim.
So we are EIS approved. Sorry, give me a second. Have funds here in Ireland. Also EIS approved. So if you've already got EIS in the UK, you cannot go back and get SEIS. And I think Shana might touch on this as well, because the rules changed just after she moved out of the SEIS bracket to allow you to raise more. So no, once you go into that kind of later stage EIS bracket, you can't go back and subsequently get SEIS.
Smaller amount under the SEIS, you can't.
Yeah, exactly. Yeah. So we actually had a couple of founders who in March raised under the 150,000 before the rules changed, and then they went into the EIS bracket, maybe raised 50k in that bracket, but couldn't go back to the 100k increase, which was quite frustrating. But I think that answers that question. So Dennis is asking,
is it a 50% write-off against the actual tax bill or an allowance against your taxable income?
So as far as I'm aware, so from an individual perspective, you get a compliance cert from the business that you've invested in to say this is what you've invested, and also you can give this to the tax man at the end of the year, and it's on your overall kind of PAYE tax bill that you will get it back, if that makes sense.
And then last one for the minute, is a UK branch expansion initiated from Ireland or UK? Is a resource to look into this? This is your opportunity, Kerry, to do your sales pitch.
Yeah, and I mean, it is something that people can do themselves, but I would just say it's a bit of a pain. And you can do it all online. No, sorry, you can't do the branch online at all, which is kind of why it is such a nuisance. So it's all done manually, a big long paper form to Company's House. So I suppose it can be done anywhere, but yeah, that's kind of where we come in, is that we kind of have a relationship with Company's House, and we can we know how the forms work, and they're very pedantic around small different things. So
Yeah,
I suppose the resource is Swoop essentially. But I think, Rosemary, we might share the intertrade offer afterwards to give people some idea of how the whole process works.
Yeah, we will.
Yeah. Will I move on quickly just to other stuff? I'm conscious of time. But we can do more questions at the end, or if anyone wants to chat to me. I just quickly wanted to touch on kind of like, this is all great and amazing that there's these great tax schemes, but I suppose I just don't want to encourage people to get really excited by them and just go looking into the UK for the wrong reasons. So I suppose kind of just wanted to quickly touch on the right time. So in terms of kind of why you would be going to the UK, I suppose firstly making sure that you have looked at all those options that Rosemary showed on her slides, making sure that you've kind of exhausted everything in Ireland. And then also that there is like a genuine interest in growing into the UK, in having UK investors, and it's a strategic move, because I think often people might do it for the wrong reasons. So in terms of kind of the right time, this is really where Swoop can help in terms of investors. So we have a network of investors that we've built up over the last kind of 5 years. Our sweet spot is early stage businesses, so pre-seed up to Series A. We're pretty agnostic on sector. I think biotech can sometimes be a bit tricky in that kind of space. I know there's some amazing Irish life science businesses and biotech businesses, so that sometimes can be a little bit of a struggle for us. But then obviously we need them to be raising kind of at least 150k plus. Mentioned bonus points for SEIS and revenue generating, but we can kind of help with the SEIS side of things. Our network is largely VCs, and I say here it's the biggest. So I think about 70% of our network are VCs. But the really, really important thing to note is that a lot of those venture capital companies are set up almost like an angel syndicate, whereby all of their funds come from individual people who can then avail of those tax schemes. So a lot of the VC funds in the UK are set up specifically as SEIS or EIS funds. They call themselves that, to avail of those tax schemes and give their investors the tax relief at the end of the year. So January to March is a bit hectic for us, because the UK financial year end is end of March. So we get a lot of SEIS funds coming to us saying, have you got anything in this space that still has SEIS allocation? So some people might have used up 100 or 150 of their 250,000 allocation, and often we can then find a fund that will come in and take the remaining. So that's just good to be aware of. Quickly just touch on due diligence and data room. I think it's probably not so relevant for this call. I actually don't really know why I included it, but I suppose just that we can help with all that kind of thing when it comes down to it. So having your data room nice and tidy, lined up with everything relevant, and we have like due diligence checklists and things like that. And then Rosemary, do I have time just to quickly touch on grant funding? Yeah, I think grant funding is kind of obviously very popular with everyone, because it's free money in a sense and you don't have to pay it back. But I think I would really, really push everyone who's raising equity to also make sure that you've looked at all your different grant funding options. So Ireland is actually better than I thought with grants, and obviously EI are quite good at kind of giving local enterprise offices some funding for specific types of businesses. So I think just kind of make sure you've looked into that. I think Swoop we have a grant finder tool where you can go in and kind of have a look at matches that might come up. So you'll see here a lot of them are kind of from Enterprise Ireland primarily, and you can go in and look at them in a bit more detail. So worth kind of having a look at that, completely free to use. In terms of like tips for applying for grants, again, similar to equity, make sure that you're kind of applying for the right reasons. So there's sort of two levels of grants. You've got local grants that come from local enterprise partnerships, and then also innovation grants. So the likes of Horizon Europe and big organizations like that will do competitions for grant funding, but they're large pots of money, and it's really, really focused around research and development. So what kind of R&D projects you have coming up. And that's where timing is kind of key. So make sure if you're applying to those big ones that you're applying at the right time. You've got a defined opportunity. So make sure that you're actually reading the grant scope properly and making sure that you're applying and you understand exactly what you're applying to. You're not just kind of applying because it sounds exciting. Again, similar to equity, kind of do it for the right reasons. Have a defined project. So as I mentioned there, kind of the R&D side of things, all the innovation grants are very, very focused around R&D projects, what kind of projects you have coming up, and then they'll fund you based on that project size. And that's where the costs come in, kind of explaining your objectives and outlining your timeline. So a lot of the grants are paid quarterly in arrears. So they'll look at what work you've done in the last quarter. Have you hit certain milestones that you set out? And if so, they'll send you the money for that. So yeah, they're largely going to be kind of looking at how you're hitting those timelines and how your project's progressing. And also kind of the economic and social impacts, because grants are obviously an investment in a sense from different governments. So they kind of want to see what the economic and social return is going to be from that. So yeah, just good to keep in mind. I won't touch on that for much. I won't go into that for much longer, but I suppose in terms of what kind of is the right stage for grants, I've just mentioned quickly here, TRL, so this is your technology readiness level. It's just good to be aware of. Don't stress about all the different acronyms I'm talking about here. So the perfect stage for innovation grants is when you're kind of in this between 3 and 7. So you've done your initial discovery research, you kind of have a solid business idea, you've a fair idea that it might work, and then grants kind of come in here to help you to get from that stage, idea stage, up to commercialization. Yeah, just good to be aware of. And then I just mentioned a couple of areas that are quite popular for grants at the moment. But I know there are definitely a couple more questions coming up there.
Great, Kerry. Listen, we can share your slides, can't we, to everybody?
Yeah,
so that
can,
will be available to you. I want to mention quickly before we get into those questions and before we start talking to Shana, the Intertrade Ireland new offer on specialist consultancy support around SEIS and EIS. So it's basically support to work with some consultants, and Swoop are on the list of consultants. So there's 2 steps according to Intertrade and how they've defined it. There's 2 steps. There's the advanced assurance process step and the compliance statement process step. So they are paying for the advanced assurance process. So basically it's a voucher effectively to work with the likes of Swoop. So there is eligibility criteria. Again, with the slides from this webinar, we will share the link to this, and you'll be able to go into the Intertrade Ireland website and identify if you're eligible for the support from them to get that step 1 of the assurance process done with the likes of Swoop and others. So just to say that beforehand. Now, there is a few questions that we'll really quickly do, and then because I'm dying to talk to Shana.
Yeah, Rosemary, I was going to say, would it be helpful? I think Shana, through her chat, might cover some of the answers to these questions. Okay. I don't know if it'd be helpful maybe to push them to the end, and we can both.
Yeah, then we can address them all together. Yeah.
Sorry, throwing you off.
No, you're all good. Shana, just hopefully Shana's available now and she can come on. There you are, brilliant. Hey, Shana.
Hi.
How are you?
Good, thank you.
Good. Thank you for joining us. You're very good to come and have a chat with us. We've known Shana a long time, since you went on the New Frontiers program here in SETU in Waterford quite a while ago. So we engaged with you, I think, even well before that. And we've had a long and very fruitful client relationship with Shana, which has resulted very recently in Shana raising 700 grand, as I mentioned at the beginning. Tell us about Tailr, Shana, and tell us about how you got to where you are now.
Yeah, so Tailr is a technology platform for the fashion and clothing industry. And I guess our sweet spot is that we slot in between the brands, the factories, and the fabric mills. And we ensure that everything that the design team within the brands is doing, that it's factory ready assets. So our key spot is using AI and machine learning for accurately predicting how the fabric will handle during production so that we get consistent sizing coming out of production. There's 2 other things that we do as well. One is that we have transparency along the supply chain for brands and manufacturers. So we stop product coming in wrong. Typically, it's about 15 to 20% of garments are being produced wrong at the minute. So out of every 100 garments, 15 to 20 are coming in wrong, which is huge when you think of brands ordering in, 20,000 dresses for just one SKU line. So it's quite a lot of waste on that supply chain. So that's the two real key things that we're doing. One, consistent sizing, and two, waste reduction. So that's what Tailr is.
And, hugely sustainable solution for these brands who are struggling to try and get this right. And for consumers then who are purchasing products, like buying 2 and 3 sizes of a dress and sending 2 of them back because the consistency around sizing has gone so out of whack. So really great climate impact that you're going to have with this project.
Yeah, exactly. And even yesterday, H&M, admitted that, yes, we need to do more with our sizing. And it's funny because when I was talking to them only a couple of weeks ago, they swore black and blue that they had no problem with their sizing, that it was fully consistent. And here they are yesterday saying, no, we have a lot further to go on our sizing and it needs to be more consistent. So it's something that pretty much every brand suffers from. I mean, there's not one brand that I can think of that I could hand on heart say, yeah, their sizing is perfectly consistent. Maybe a bespoke brand who is, doing custom garments for people, that's probably a bit more consistent. But in full scale production, it is very hard for brands to get consistency.
Yeah, brilliant. And tell us, Shana, obviously when we see the headline in the Sunday Business Post or the headline in Silicon Republic, we all go, oh, look, this has been like an overnight success for this company who's raised quite a lot of money and has really fantastic plans. And we all know the reality of that is not quite the case. You've had some journey in pivoting, in changing what you were planning, and then coming to the point that you were able to attract this level of a raise to scale and to build a company and to internationalize the company. Tell us a bit about the funding journey that you've been on.
Yeah, so it definitely was a journey and a half to get to where I am. As someone had said to me last year, it takes 10 years to be an overnight success. And as you know, like I've been doing this since, I was on New Frontiers in 2019.
Yeah.
So it has been a long journey. Originally, when I set out to solve some things in this industry, I was looking at it from a different aspect and, trying to get that famous product market fit and everything else. And it was very hard. And I wasn't listening to what people were saying. I was just kind of hearing what I wanted to hear. And I wasn't really getting product market fit. And then, COVID happened and it allowed me to have some breathing space to really look at the industry and look at my previous experience, because what I was trying to do had nothing to do with my experience. And for those who don't know me, I'm previously a garment technologist. So I used to design and develop fire suits, FR and ARC protective wear, and also some sports wear as well. So it was really about going back to my experience and saying, okay, when I was a garment technologist, this is exactly what I would have wanted and would have used. So since I had started on that journey in 21, things just really started to take off from there. So some things about my funding journey. Number one, I am a sole founder. I'm a non-tech founder. So I didn't bring on a tech co-founder. That was one of the biggest barriers for me, because a lot of investors had said to me, you're not going to be able to do this. You need to bring on a co-founder. And I knew in my heart that it wasn't that I didn't want to bring on a co-founder. It was that I wasn't finding anyone who I really wanted as a co-founder. You have to be so careful about who you're bringing on as a co-founder, because I've heard it so many times from even you guys in BIC, it's a marriage with a planned divorce. And, you really have to know this person that you're bringing in. And I wasn't finding anyone that fit the bill. So I decided, no, I'm just going to keep going with what I'm doing. If I find someone amazing, I'll bring them on as a co-founder. And if I don't, that's fine. I'm still going to do it. So I partnered with an external development team. So they are a partner of AWS. and they, cost money. So I needed money to build an MVP, considering I didn't have a co-founder that could build it for sweat equity. So I applied for as many competitions as I could. I still had money left over from, at the time, the competitive start fund, which is now the pre-seed.
Yeah.
Yes.
Yeah.
So I had money from that, and of course I won the Seed Corn Award. So that was amazing, some extra cash in. I used that to build my MVP. So there was a few things that I set out with the MVP to do. There was certain features that were must-haves for this MVP to really prove the theory on what I was saying. So we went live last March with testing. The difference between what I had been doing before and what I had been doing this with Tailr was I started ringing brands, telling them about what I was building and saying, look, when I have this built, would you be interested in coming on board and testing? And I had 6 phone calls in a row. And after the 6 phone calls, I had them signed up within 30 minutes. And I said to myself, yeah, that's product market fit. When we went live, we had the 6 brands on board, started testing, and we were saving them 4.5 hours on creating tech packs and communicating with factories. So we knew there and then, yep, we're onto something here. So we were in testing for about 5 months. That brings us up to September 2022, and I started reaching out to investors, started telling them, my vision, what we were doing, the test results that we had, and the funding journey was a long process. I mean, at the time, being in tech was very bad, and there was a lot of tech layoffs that had started happening, and there was a very dull appetite for investing in tech at that exact moment I decided to go out. So it was a very hard few months, speaking to investors, showing the vision of the company, showing the testing results, showing where we're going to be in the next 2 to 3 years. And it was, there was no's, there was maybes, and there was yeses. So it was, trying to get to the investors that were interested in what we were doing. So looking at investors who had either previously invested in fashion and clothing tech or who were in an aligned industry. And that was really key, especially for when I started looking at the UK. I had spoken to so many investors here in Ireland, and there really wasn't an appetite for what we were building. So that's why I decided to go to the UK.
I think that's interesting, Shana. When I remember talking to you maybe this time last year, maybe a little bit earlier than this last year, and you were very determined that the UK had to be part of your investment strategy because of the interest in fashion tech and the potential use of your product in the UK. You felt that it was a better fit, that there was a better understanding, there was a better core group of investors who would get it and who would appreciate it and want to be involved because they had a stronger understanding. And I think that awareness definitely helped in your process, because it is really important for people to understand what investors are going to invest in the product, and to go straight to them and not, we all have to talk to an awful lot of people in this industry to get to the point of having people even being a maybe. But it's at least narrowing that search into the group that are going to have a track record in your segment.
Yeah, absolutely. So because I am obviously from industry as a garment technologist, I know this industry so well, and I knew that the UK was a huge industry. But when I started looking at the metrics, I quickly figured out that the UK is the 3rd largest clothing market in the world, second only to the US and China. So I mean, it's a huge market, and it's a hugely important market. Mm-hmm. I mean, if you look at the big 4, even for Fashion Week, I mean, London is included in that just 2 weeks ago. So it is a huge fashion industry over there. So it just made complete sense for us to be there. I mean, even when we look at our customers, there's probably about only 2 or 3, customers here in Ireland that we could sell to, whereas in the UK, we've thousands. So it made sense for us to be over there, to have that visibility, and to get, investors from industry in London as well. So we have 5 angel investors, and, 3 of them are from industry. So it really really helps being over there in London.
And
So
when you were thinking, okay, and you were very determined. I remember that was your strategy. You had identified that was the plan, that you were going to raise in the UK. You weren't sure, you weren't getting as much traction in this market. You ended up getting some decent traction in the investment market in Ireland, getting Delta on board and keeping EI on board. But then when did you approach Swoop, or when did Swoop come into the equation for you?
So last summer, I had been talking to another startup company, and I had been talking to them about, what I was trying to do. And I was saying to them that I wasn't getting any bites, no traction at all from Ireland, and that I was looking at the UK and I didn't know where to start. And they had said to me that they had heard of this company called Swoop, and they were like, I can give you the intro if you want. I said, yeah, that would be amazing. So I had been talking to another company who had got SEIS and EIS, and it seemed like a very complicated process, and they weren't actually successful in getting it in the end. So they had said, yeah, we'll also give you an intro. So that they gave me the intro to Kerry, and I jumped on a call. So we started that process in, I think it was October. And, that it is all on paper, and there's some things that, the UK just don't understand. Like, for example, one thing that came back for us was my address. So I had given the guys, my address, and when the HMRC checked it out, they were like, that's not the right address. So that came back in paper form. And it actually is the same address. It's literally because I'm on the border between Waterford and Kilkenny. And it was a pain. And like, everyone in Ireland understands that. They all understand, living on a border, and you might have, one postcode for one place, but, you have a different postman. And they just didn't understand that in the UK. So that was one of the things that was flagged up. So it was, overall, it wasn't a hugely onerous process. The guys in Swoop were just so on the ball with absolutely everything. So it was such a good process. And Kerry and Tracy as well from Swoop was just amazing. Any question that I had, because of course I couldn't speak to someone who had been successfully through this process before. So I was going through it, learning everything as we were doing it. And it was a really good process. I couldn't imagine doing it on my own, to be honest.
So there's the two elements of the process: there's setting up of the branch, and then there's the advanced assurance. And you started that process in, say, October. How long did it take, and Kerry, you might be able to talk to this answer, how long did it take to get to the point that, Shana was ready to talk to investors, and that everything would be set up if she was offered a term sheet?
Yeah, I was gonna put in there and be like, Shana, you're making this sound very rosy, because it wasn't that straightforward. We actually had a little bit of a scare with Shana's, because we needed to get the SEIS approved by the tax year end, and we were tight enough for time. So I think really everyone should keep that in mind. Like, give yourself loads of time to get this in place. And in an ideal world, everything going smoothly, the branch can be set up within 6-7 weeks. That didn't happen for us. And then same with SEIS. So like, I always say to people, give yourself at least 3 months. And honestly, at this point, I'm nearly saying 4. But I think something that's important to note is that we were still able to start the investor outreach for Shana on the basis that we had her branch, she had a UK entity via the branch, but we knew that the SEIS was going to be okay. It's a genuine startup, genuine, we were 95% sure that it was going to cross the line. So we were able to start that outreach. She was then in later stages with an investor by the time the SEIS came through. So it doesn't completely, you don't have to wait until you've got that box ticked, but it is important just to give yourself a lot of runway on that side of things.
Go back to the investor outreach. So while all this paperwork piece, which is very paperworky and bureaucratic, has to get done, you were reaching out to investors on Tailr's behalf.
So we have a network of investors. We are quite selective in businesses that we can help in terms of what can kind of fit in with the network. We were very fortunate that there was one VC in particular that is probably made for Tailr, and it just worked out quite quite smoothly in that sense. But we do a lot of investor outreach for different businesses. Kind of half my job is split between meeting investors and meeting founders, and trying to kind of match them up where it's relevant. So yeah, we can help there, and we can help a lot of the time with SEIS. You need to be able to say you've got a potential investor for the application, so we can help with that. Yeah.
And Shana, like obviously, you know, what we're kind of suggesting to startups is very much what you did, which is, you know, you approached investors in Ireland, you know, you struggled to get the traction that you wanted here. You started identifying that the UK was a better fit for you, but you were still in talks with investors here in Ireland at the same time. So in the end of the day, it was a combined round of Irish and UK investors. So any round of that size, which is like 700 grand and anything above, it's very hard to fill in one or two investors. You need, you know, a pool of investors to fill that size of a round. You know, I know that wasn't you veered between different strategies, and that's the interesting part of the journey, is that you change your mind a lot and you have to go with the flow. But looking at it now and looking at the investors that you have, you're happy with the investors that you have and the board now that you have for the business, etc.
Yeah, definitely. I think like when I was starting out on this journey, so many people had said to me, you know, it's not just about the money, it's about who the investor is, and make sure that the investors that you're bringing in are, you know, when times get tough, are they the people that you really want on your board? Are they the investors that you really want on your board? And that was really important to me. So I am honestly really lucky with the investors that I have, even throughout the whole process of closing the round, because we had to close it in different stages. So we had to bring in the UK investors just before the end of the UK tax year, which was, you know, that ended on the 6th of April. So as Kerry had said, it was kind of a bit of a mad dash to the end, because we had investors and they were like, we want to invest quick. So it was a bit of a dash. And then we closed Delta in May and closed Enterprise Ireland a couple of weeks ago. So it ended up being in 3 separate tranches. And that was even complicated in itself as well, because you had to deal with the SEIS and it was just SEIS for this round for UK. And then, you know, the way that we had done it was structured it so that anyone coming in would sign up to Delta's investment docs. So that's the way we did it, just to make it a little bit easier for us. Yeah. And the investors all understood this, and you know, that was a great process as well. So that was all the different strategy that we had. But it was something that we had to do, because we just knew that the investors that we were bringing on, like one of our investors that we brought on, Yale, I mean, she's previously the CEO of Pangaea, you know, was on the board of PDS. And we were like, we need her involved, because the experience that she has in the industry and what she can offer is so much more than money, from intros to strategic advice. You know, it was so important. And then looking at Delta, so we're dealing with Amy Neal, and Amy is absolutely amazing. She is such a good person to have on our board. Like whether it's good news or bad news, it doesn't faze her. She's like, let's get down to it. What can we do here? So she's amazing to have on the board as well. And then Hatch. So Hatch is our VC in London, and they are absolutely amazing. So Hatch was set up by Scott Weaver's Right, and he had physically and mentally bore the brunt of trying to deal with factories and getting product in and dealing with production. So he knew straight away what I was trying to solve. And it was literally within a 30-minute phone call, and he was like, yeah, we're in. So that was absolutely great to have those guys in as well. So I do have to say that I'm really lucky with the investors that we brought in, because, you know, you do have to look to the future, and times won't always be so rosy and so good. And it's who you want in your corner when those types of things happen. And that's what I was looking out for.
Brilliant. We have a couple of questions here before we wrap up, so they might spark a little bit of discussion. Lots of people saying, well done, Shana. And somebody being very clever saying waste reduction, but spelling it WAIST, waste reduction. So John has been very clever here. Munir is asking, are there special VCs or syndicates for life sciences? I would presume that that's within your network, Kerry, that he's asking that question about.
Yeah, I've just answered a couple of other questions, by the way. I just typed the answers. I don't know if everyone can see them, but I don't know. We might be able to share that afterwards.
We might drop back into them, but yeah.
Yeah, cool. Yeah, so the UK VC landscape is absolutely massive. There's literally a venture capital company on every corner, particularly in London. On the life science side of things, there are a number of investors that look primarily for life sciences. Obviously, they're kind of a different type of investor to some of the more techie ones. They understand that you might not be commercialized for a lot longer, that kind of thing. So we have a network of investors there, and feel free to reach out, and I can see if we can help at all.
Brilliant. Francis is asking, were you trading, Shana, were you trading when you were raising? How did you split your time between raising and keeping the lights on?
So I'll answer the first part first. No, we weren't trading. So we were pre-revenue. And I mean, all the odds were kind of stacked up against me in that, we didn't have any revenue. I didn't have a tech co-founder. So it was pure perseverance, showing the test results and really showing the big vision. And it also helped that I was from industry and that there was industry investors coming on board, because that was a really good sign of, if you have people from industry investing in this as well, then there's obviously something here. So that was really important. If you're not from the industry that your startup is in, you have to make sure that you do have angel investors or a VC investor that is from that industry coming into your investment round, because that is, that's a really good sign of what you're building is going to make a difference.
Good validation, yeah.
Yeah. Now, the other question is a lot harder. And honestly, there is no right way or wrong way to do this. It's all about trying to find the balance and trying to find what works for you, and just be open to the idea that there will be times when you do have to work all night. That's pretty much it.
Yeah. Fair enough. Last couple of questions before we wrap, because I'm going to wrap at 11 on time. Somebody saying, did Swoop help with the pitch deck? If John, if you're a client of a business innovation center, they should be able to do that. But I don't know, does Swoop work on pitch decks as well?
I can't remember. I think, Shana, we did a bit of a review probably of it and a couple of pointers, but I don't remember. We definitely didn't help Shana build her pitch deck. We can help businesses who don't have a pitch deck, but I think, Rosemary, what you guys offer is probably a lot more in depth in terms of getting your pitch deck really nailed and all the financial planning involved in that as well. But we do have services there, but I think I'd really recommend businesses to go to their BIC for that.
Okay. Oh, yeah, John is saying people change the pitch deck depending on the jurisdiction, but yeah, I think you can talk to one of your BIC advisors about that as well. Somebody's saying, what made you decide to apply for UK funds, and how did you convince UK investors? I think we've kind of covered that based on the industry piece and your industry knowledge and that kind of stuff. And then I'm just going to go back into the couple of questions there. Wrong one. Sorry, now my eyesight is failing me here.
Yeah, I don't know if you can see the ones that have been answered.
If the business, I think we kind of pretty much have covered all the rest of those. So folks, that's pretty much it. I think we've covered all the questions. Lots of well dones, and congrats to Shana, it is a great story, and it's only starting now, to be honest, isn't it, Shana? There's loads to. You're hiring, you're finalizing your product, you're commercializing, major stuff going on.
Yeah, absolutely. And I didn't find a co-founder in the end, but as soon as I closed the round, my CTO manifested out of thin air, and I wouldn't have had it any other way. My CTO is honestly like amazing.
And your CTO has massive industry experience, doesn't he?
Yeah, so he's been working in industry since 2003. So he is a textile expert and is also, has built tech for over 200 clothing brands. and really understands the type of digitizing that we're doing for the industry. So I was actually so lucky that I didn't bring on a co-founder in the end, because if I had of, you know, there wouldn't have been space for Magnus.
Brilliant. Listen, I really want to thank Shana for giving her time to us. She was a great client who always responded so brilliantly with us. So we're delighted with all the success of this year, and I'm really looking forward to watching Tailr grow. So thank you, Shana, for doing this for us today. Big thanks to Kerry and everybody at Swoop for supporting us with this. We'll send out Kerry's slides, which I know everyone is going to be very interested in, and the information about the Intertrade Ireland support for those assurances and the work that the likes of Swoop can do for you. Don't forget, anybody, that our big pitch is open, and it's open to any company in the country under 5 years old. So the criteria on our website, southeastbic.ie/big-pitch. I'll be sending the link out to everybody who came. And thanks all for joining us today. And we will see you again at our next webinar. So thanks, guys. Appreciate it.
Thank you.
Rosemary.
Bye-bye.
Thanks.
Cheers, bye.